Hey, old dogs. I just want to take a moment to welcome a new sponsor to the show, Smart Move. Smart Move is the best way I know to protect yourself from evictions and bad tenants. Smart Move has a special offer just for old dog listeners. Just go to tenantscreening.com, enter code OLDDOG25 at checkout, and you'll get 25% off your next screening. That's tenantscreening.com, enter OLDDOG25, and get 25% off your next screening.
This episode of the Old Dogs REI Network is brought to you by Mino Studio.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is a show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, we have a great guest today for you. This is a gentleman who has definitely been through all phases of raising cash flow here. I'm talking about Agostino Pintus. I first met him by being on his podcast, which is called the Bulletproof Cash Flow Podcast. But let me tell you a little bit about Agostino. He is a multifamily investor, a syndicator, and entrepreneur with more than 15 years of experience in real estate. He currently oversees strategic partnerships, capital development, and platform development for Reality Dynamics Equity Partners, an investment firm specializing in multifamily acquisition and asset management services. He is the subject and host of the Bulletproof Multifamily Mindset Show, a series highlighting topics every multifamily investor should know to build their success, as well as the host of the Bulletproof Cash Flow Podcast. Of course, I was a guest on a show focused on interviewing the top experts, yes, of course, in the real estate arena, all of which can be found on iTunes, YouTube, and Facebook. Okay. He helps people build financial freedom through multifamily real estate and leverage their unique core competencies to achieve success. Investors at the top of their game work with Agostino to maintain their position, and in moments when business gets difficult, they strategize their return to greatness. If you are feeling stuck with your real estate portfolio or unsure of how to start, Agostino will lead you to clarity, focus, and action. Wow, man, I should talk to you, Agostino. This is a great background. I love it. I love it.
Thanks. Thank you. Yeah, it took a lot of work to get there. I'll tell you that. It wasn't exactly easy.
Wow. Well, I want to hear, how in the world did you get into, you weren't always in real estate, right? You kind of moved from different areas. Why don't you just give us your story, your background?
Sure. Well, my journey in real estate started over 16 years ago at this point. But I think the most relevant time was when I really hit rock bottom and really needed to make a change. I was actually living in Florida at the time, and I got home from working on a consulting gig that picked up after the economic crash. Unlocked the front door, I step inside, flip on the light switch, and there are no lights. And then I get this sinking feeling in my stomach. And I knew why I was standing in the darkness. It's because I had no money to pay the electric bill. I mean, it was at that point, like, I felt like an absolute failure. And the reason why was because up until that time, in the years prior, I was a C-level technology executive with a publicly traded company, managed large budgets, great deal of success, global team, doing all this great stuff. And as I thought back at my past, I couldn't believe that I was in such a bad shape that I couldn't even afford to pay an electric bill. So it was just a very, very terrible time in my life. I was frustrated. I was alone. I was lost. I'd just gone through a divorce. It totally wiped me out. And needless to say, I was just afraid for my future. But it was in that darkest moment that I realized that I really needed to make a vow to myself to become financially free for myself and for my family. So that's really what it took for me to make an actual decision to really get out of this scenario that I found myself in. It really was a terrible time, but then it was really seeing the light, understanding what I needed to do to make the next stage of my life really, really happen.
And why real estate? How did you have to? Now, were you in real estate related business, or were you in totally unrelated field?
No, when I was a C-level exec, and as I said, a publicly traded company, one of the people that I was working with, they were doing single family homes. And at that time, the company had just gone public. We were all of us C-level execs were flush with cash, and my friend, he says, you ought to invest in single family homes. I'm like, why? Well, okay, get the cash flow. Super. I'll look at that. It's kind of like in passing, right? It's like, yeah, okay, maybe I'll check it out. And when I realized that if I can buy one of these houses, and I was paying full retail at the time, I had no idea what I was doing. I was buying houses, sticking a tenant in there. I was still making $300 or $400 a month, even at retail. I was still making $300 or $400 a month a house. But I saw that it's like, I'm exposed even as a C-level executive that the only difference between me and someone that works at McDonald's is that my bills are bigger. That's it. We all have the same fears. We all have the same insecurities about that boss coming in one day and handing you the box and telling you to get out. It doesn't matter whether you're a $10 an hour employee or someone earning $300K a year. It's the same thing. So I got to work trying to build a portfolio of single family. That's what I tried to do. And what I did was I went into doing the single family and small multifamily, and it didn't even occur to me anything about syndication. I used to remember seeing these big buildings. I used to thought, like, who actually owns those? I assumed the banks owned them. I had no idea. So it was quite the journey getting from doing single family homes that I knew always threw off some bit of cash, even through the rough times in my life that I had even before when I went to Florida for that consulting gig, that I saw that, they're doing real estate is the way that you can build that passive income coming in. My only issue is I wasn't doing it big enough. That's the problem.
So you weren't quite pulling in the enough to be able to do that full time, right?
Exactly. So I built a portfolio and I'd sold off a lot of it, again, due to divorce and things like that. So I didn't have much left. And leading up to that crash, I pretty much, like everyone else, tightened up their belt and just held on for dear life. Unlike other people in this space, I didn't go bankrupt. I didn't lose any money or anything else like that in the real estate side anyway, aside from, of course, like my personal residence, like everyone else did, right? But I did not go bankrupt or anything else like that. I refused to do that. I promised myself that I would not go bankrupt, and there are many other people in this space that have. So, but yes, I stopped investing just because I was scared. Scared money. That's all it was.
But you held on to a number of your properties still.
Yes.
Through it. And it's true that the people that did hold on, came out really well. If they held on to it and moved into, today's economy. I mean, so, but, wow. So how were you surviving? I mean, during this time?
It was picking up little odd IT jobs here and there, like either consulting, like the consulting gig in Florida that I had, or picking up temporary CIO roles or CTO roles, things like that. Was really how I did it. It was very high degree of turmoil and a high degree of I guess insecurity, right? Part of it is that I did not have a clear purpose defined. That is probably the biggest issue that I had right there. Without that goal, without that purpose clearly defined in your mind, where you're writing it down every day and you're charging for a specific point that you want to be at, you're kind of like drifting. And unfortunately, many people do this. They drift along, they drift through life. And I was one of those guys. And, it really took years before a friend of mine, a real estate attorney, he explained multifamily syndication. I just happened to be on a call with him. I said, hey, you know what? Like, I figured, like, if one building works or one house works and two houses are better, what about a whole building? So I asked I had my friend on the phone. I asked him, hey, how do you buy a building? He explained syndication. I'm like, wow, that changed the whole field. That changed everything. Once I understood that we're able to syndicate deals, to put deals together. We have investors come in alongside with us. We run the deal. We deliver a nice return, and everybody makes money. It's phenomenal. It was a tire. That in itself was a game changer, but that's not all it takes to win at this game.
Wow. Do you know roughly how many properties you had at that time?
In the single family and small multifamily. I might have had like maybe 25 of them at any given point. As I would switch them out as I go, but I think at the most I held on to is about 25. That's
a pretty good portfolio there.
Yeah.
And during that time, you decided, okay, I'm going right into syndication. You were gonna buy like a commercial building, apartment building. What were you looking to syndicate?
You know what, Bill? You know what I did? As soon as he told me about this, I sold everything. I sold it all.
Really?
Sold everything. Sold it all. I knew that was the answer, right? I knew that was the answer, but I still wasn't prepared, right? But I knew that's what I needed to be doing. So I sold everything. And what I did was I decided I was going to focus on three things. I was going to make a decision around goal setting, creating a vision board, writing my daily affirmations. I write them down every single day and really focus on just doing multifamily. I'm not going to do wholesale. I don't do industrial. I don't do mixed commercial. I just committed to one thing. That's it. Then I found some mentors, and virtual mentors. I followed guys like Grant Cardone or Carlton Sheets or these other guys. I got my hands on any real estate stuff I could to study and train and learn this business. And then I just started looking for deals, analyzing deals. I would analyze 100 a week, maybe more if I can do them, if they were available. And I looked outside of my target market. I practiced how to actually do it. But even all that still wasn't enough. It still wasn't enough. It's not enough,
And you're doing this all by yourself?
All by myself, yeah. I did this all by myself, yeah. I had my wife eventually. She was my girlfriend at the time, but ended up becoming my wife. She was a really big part of supporting me through all this. We had just met at the time, and but she watched me just double down on all this stuff. She was with me. She was traveling with me to all these different houses and unloading them. She's like, "Well, wow, this guy's got a lot of houses." at the time. But you know what it was, though, Bill? It was the psychological aspects of working and understanding people. That was in itself a big part of the success that we have today. That's number one. But number two is getting out of the fear-based mentality. That in itself is something that holds so many people back. And I believe that many people are afraid because they don't understand. Once people understand how something works, they're no longer afraid. Right?
Right.
And that's a big part of it. Yeah.
So you're analyzing, you dig in, you start looking for properties. Did you have like criteria, like you're looking at certain markets? You were looking, it's a certain criteria of what kind of buildings you're looking for, number of units, all those things.
Well, at first I was looking at smaller deals, and my mentors virtually told me that the small deals are a pain. And it's true, they are. They're a huge pain to finance, to raise money, and all that fun stuff. I still do them from time to time if the financing is simple and easy. But for the most part, I'm trying to stay above 100 units. That's because of the work that has to get put into doing a deal. It's just not worth the headache of going through anything smaller than that. I mean, I will do it, but it depends on the deal and what the upside is and what type of return we can give to the investors. There's a lot of dependencies, but yeah, it's at first it was all like understanding what the levers are. When I found that Ohio, specifically Cleveland, was the market to be in, I had one more place left in Virginia, sold it, and just plopped down here in Ohio, and been working out here ever since. And we've built up a big portfolio. We just closed on one deal last week. We're up to about $30 million in assets, and that's over the past 18 months. We grew awesome. The portfolio to 30 million. Yeah.
Tell me about your first deal.
Wow, the very, very first deal, the single family. I still remember that like yesterday.
Well, you can say that one, but I want to hear the first syndication too. So
the first syndication deal, yes. Well, the first multifamily deal I did on my own. I felt that if I'm going to go out there and raise money, I needed to demonstrate that I am serious about doing a deal on my own. And it was a little 11-unit property. I got a sweet deal on it. It's just, and it cash flows like crazy. It's awesome. Love it. Love that little deal.
Also in Cleveland?
Also in Cleveland. Yeah, it's in Akron, actually. It's in Akron.
Okay.
It's in Akron. Yeah. And then, but the first syndicated deal, it was a deal in Canton, Ohio. And I found the deal. It was on LoopNet of all places, where deals go to die. That's
hey, my first deal too. Same thing. LoopNet, believe it or not, same thing. The place you're not supposed to go.
Yeah, exactly. The place you don't go to find a deal is the place I was. The only reason why I was there was because I was practicing. I just happened to be practicing running deals, that kind of thing. And every once in a while, I would get an email and saying, "Hey, there's a new deal, or there's something that's cropped up, or whatever." So I'd go check it out just to see, why not? You really have to know your market. And I still know most of the deals that are for sale today, whether they're on LoopNet or not. This is how I know. I stay in tune with what's trading in the market. You have to know your market. Anyway, that we could talk about that in a second. The deal was up on the screen, and I called my property manager on my first deal, and he just happens to be selling this deal that's on LoopNet. And I said, "Hey, man, what's going on with this deal?" Like, we're just talking, we're catching up about the property, and I said, "Hey, what's going on with this deal?" And he says, It just fell through. They had it listed for $1.8 million. And I said, "What's the bottom line number?" And it said 1.4. Send over the PSA. I'll sign it right now. I signed it without even looking at it. Executed. I executed without even looking at it. Because I knew, the thing is though, at that point, I knew my market. I knew the broker personally, because he's already managing one of my properties. And so I had a high degree of certainty that it was going to be a good deal, just based on that alone. That's how I knew. And then as soon as I hung up the phone, I started making phone calls. Started calling on all those times. So I was planting my seeds, for capital raising. Hey guys, listen, I'm gonna have a deal coming up here soon. I started getting soft commitments. And working with a partner as well. I had a partner out of Washington, and she and I, we raised the money for it, closed that sucker down in 90 days, and it was done. And that's how we did it. I mean, there's a lot of background work that occurred up until that point, though, right? Because we're always in the process of talking to potential investors, telling them what we do and how we do it. And this is no different. It seems really fun when you find a deal and it just happens to fall in your lap. Like in this case, the property did appraise for just over 1.8 million, and only paid 1.4. So on closing day, equity, we already had $400,000 in equity already built in, like just without doing anything. Right? It's crazy.
That's ideal. Yeah. What else can you tell me about the property?
Well, the property itself it's one of those low income, affordable housing type scenarios, which I'm not a big fan of, but it was such a good value that I had to pick it up. These days we're doing more Bs. We mix in some Cs every once in a while if we find them and it makes sense. But the affordable housing stuff we just don't do. It requires a very different level of management that most newbies just aren't prepared for. So if you're a newbie out there and you're thinking about getting into that space, I would recommend against it. Right? The cash is good. The rents are typically higher, but so is the level of risk. The tenants generally don't care about the property as much as, like, say, someone that's going to be and even though they all have annual leases, they just don't seem to care as much about the property. And you want to put tenants in there that care about the property and are going to be good to their neighbors and all that fun stuff. But it's just a whole different demographic.
How many units was it?
That was only 56 units.
56, got it.
Yeah.
And now, were you close enough to manage it yourself, or did you said you had a broker that managed? So did he take on that one as well?
Yeah, absolutely. So everything that we do, unlike some other syndicators, we do everything here in the Cleveland, Akron area, and some of the tertiary markets. I typically shy away from tertiary markets. Everything that we do is in this market. So I'm usually within 40 minutes away from a property, me personally.
That's great.
And yeah, I really, because I know this market so well, like I said earlier, you really have to understand your market. Our game is just dive deep into a market, get it to about 1,500 units, and then move to the next one and just do the same thing. Right.
So you move your south. I mean, you didn't grow up in Ohio then.
No, I grew up in Canada. I grew up in a little city in Canada. Yeah.
So you moved there, and with the commitment, I'm buying in this area, and wow, that's awesome. And have you moved to another area since then? Or are you still in Ohio?
No, still in Ohio. We're going to be locking up another deal here soon, another 150 units. I think that we probably need to get, I'd say another 300 units, and we'll be ready to at least start considering other places. I mean, I already have some places in mind that are behind the curve in terms of where the market is, right? So if I don't know if you or any of your listeners follow the Black Creek Group, what they do is they monitor 54 MSAs, and they basically show what cycle where they are in the cycle, right?
Interesting.
Wow. So it's definitely something to check out. And there's four components to the cycle. There's recession, recovery, growth, and hyperinflation, right? And at any given point, any one of these MSAs may be in one of these spaces. Well, 53 of them are all in hyperinflation except for one. And that one is in Oklahoma City, and even Oklahoma City has got. I've been keeping a close eye on Oklahoma City, and even Oklahoma City's got some crazy prices going on right now down there. So it's the market right now is at a premium, and really aligning with the right syndicator that knows what they're doing in a market is to me is of paramount importance. They really got to know their market.
Oh yeah, that's fascinating that one that you've went in and just specialized in a market, moved there, learned it, and know it, and I'm sure you're learning all the time as well, because there's so many other markets that are nearby Cleveland, and that I'm sure have opportunities as well. So that's great. That's great. And do you? I mean, are you still doing this just you and your wife, or you have other folks that you're working with? I mean, you mentioned a partner in Washington. How active are the other folks in sort of the day-to-day stuff?
Well, I'd say in the day-to-day stuff, I'm probably the most active. I'm always speaking to property management about one deal or another. So the partners are, depending on which deal they are, I have partners in Washington and Texas, and of course here in Cleveland. And I would say that we're very active, with the exception of one, of which again we can talk a little bit about that here in a little bit. Good, it's good, valuable lesson. It's going to be a very valuable lesson for your audience, I'm sure. But I'm probably the one that communicates with property management on a regular basis. It's one of those things that you have to be on top of. Now, another benefit to being in this market is that, for instance, I'm talking to property management. It's one of the most recent emails I got here. One of my other partners, he's able to get flooring by the container full, right? So we have a property we took down some time ago. It's 126 units in Cleveland. And we want to do flooring in like 60 of the units. I mean, that's half a container right there.
Yes, easily.
So yeah, it's like when you're able to do that kind of stuff with partners that are here locally that are connected, it's great. And as I said, I'm talking to my property management all the time about stuff like that. It's like, hey, great. What else can we get? What else can we order from overseas and possibly get it in here, get it into the States, And we ended up closing another 76 unit deal last month down in Akron. And now, of course, this 150 units going to be coming up here in about 90 days too. So it's like we're going to need a lot of stuff.
Yes, a lot of flooring. That's for sure.
A lot of flooring. That's for sure. Yeah, that's for sure.
Well, you've had a very interesting ride here for the last 16 years, and what would you say is sort of your biggest mistake that you've learned from?
Yeah, I've been fortunate that in my reboot, that I've applied many of the mistakes that I learned from others in their business, right? And that's one of the key things. I immersed myself into books, and with a specific edge towards human psychology. That's something that I really put a focus on. My background is engineering and tech. But one thing that I overlooked early on in my career was the human aspect, and that to me is something that I won't make that mistake again. But I would say that early on, I partnered with someone that was just awful. I don't know what else. I can say some things. I can use stronger words, but I'll choose not to for the audience. But many complain that partners will just wreak havoc or cause problems, but this partner, he does absolutely nothing. He just does nothing. he does nothing at all. So, and it's one of those things that I saw, but it was too late because I already committed to the deal. And one thing that you do is when you commit to doing a deal and the sellers are counting on you, the bank is counting on you, everybody's counting on you, and your partner lets you down, it's all on you. You got to pick it up. What else are you going to do, right? What else can you do? But one valuable lesson that I learned was that you really have to vet your partners thoroughly. You have to know, and I'm not saying not just the general partners, but the limited partners as well. So one thing that I learned from all this human psychology is that I don't want any negativity in my business. Scaling the business as fast as we're doing it now is hard enough without having a bad partner dragging you down, slowing you down with their negativity, or calling you every day. Oh my God, what's going on? There's a fire at one of the properties, which actually happened, by the way. There's a fire at one of the properties. That kind of stuff happens all the time. That's why I have insurance. I'm not worried about it.
Exactly.
It's fine. It's under control. I don't care. I'm locking up more deals. It's fine. Everything's under control. Right? That's why you have a team. And so if your partner is going to be like that, you don't take them on. Simple as that. But understanding who you're partnering with is, as I said, absolutely paramount. I will never make that mistake ever again of hooking up with a bad partner. Never going to happen again.
Yeah, surprisingly, that probably is one of the most common mistakes that out of 330 interviews, and so I mean that is one that's mentioned a fair amount, and it makes me very cautious, just in that realm as well. And there's got to you've got to know how to vet them and know how to really what to look for that are sort of red flags that might indicate that there's going to be an issue ahead.
Yeah. Well, you know what, Bill? One thing that I noticed with partners is that I spend time with them. This is something I learned from Warren Buffett. You spend time with them, you get to know some of their friends. You set up a meeting, where you set up meetings like you normally would. You're not trying to do any gotchas or anything else like that. But you set up a meeting. Do they show up on time? That's a good thing, right? Are they, what kind of excuses do they make when they don't show up? Right? Are they, if they're in a committed relationship, are they running around on their spouse? That's something else too. That's something I saw. I saw this one gentleman was in a committed relationship. He's running around with some other woman. And whatever, to each his own. But still, it tells you a little bit about who they are.
Their character, right? Definitely.
Their character, right? Yeah. And do they complain about other people? Right. And are they reliable? It's simple things, and sometimes it's just a gut feeling. Mm-hmm. Right. If they have that gut feeling that says that they are not they're not to be trusted, then you don't do it. One key thing that I've done repeatedly with my business is that if I want to borrow money from a partner, say, hey, I need to borrow $30K for the next couple of days or whatever to take this thing on. If I feel like I have to write it down on a piece of paper, then you don't do business with them. That's the rule right there. If you feel like you can't trust them, that you have to write it down, you're not to do business with them. That's the rule.
Interesting. Yeah. Well, conversely, so what would you say maybe your biggest success might be in that time span here that you've been involved with real estate investment?
Wow. It's over the past year and a half, like I mentioned, we've done about $30 million in transactions. And I'm not saying this is not as a limited partner. This is as a general partner, like me going after deals, working with partners and taking them down. That's what we've been doing. And, so limited partners are great. I love limited partners, but as a general partner, we're the ones that are doing the heavy lifting of taking the deal down and making sure that it's operating properly and working with management and working with the lenders and all that fun stuff. It takes a high degree of work. Not complaining. It's just what it is, right? And it really is a very rewarding experience when you think about it. But at the same time, too, I also know that I got plenty left in the tank. We're looking to grow this thing into $1 billion in the next 4 years. So awesome. It's a lot of work to do.
That's great. Just out of curiosity, okay, so you're in Cleveland now.
Yeah.
Let's say, boom, you pick up 300 units, next week, or you all of a sudden come across and it's a great deal, and you've reached your goal for Cleveland. Do you already know sort of the market? Let's say maybe it's Oklahoma City, just as an example. Okay.
Yeah.
Are you ready to leave Cleveland? Do you feel confident enough that, boom, you could leave Cleveland this soon and go to a new market and start all over in terms of, reestablishing a new, a new portfolio over there, or adding on to your portfolio? Are you ready for that yet?
Yeah, you know what? Yeah, we have not selected the next market yet, but what we would probably start doing is traveling there and getting to know the brokers. The brokers are the ones with the deals. right? The good thing about being in this market and focusing on this market is that the brokers here, they know who I am. All of them know who I am. And when any deals crop up, I'm usually the ones they call. They give me a call and they say, "Hey, we just happen to get this deal. Do you want to take a look at it?" So that in itself has an advantage, right? If you're just rolling into Oklahoma City or wherever it is for the first time and you don't know anybody there, they have no reason to even know who you are and whether they should even give you a deal or not, right? So that in itself is one of the reasons why you can't just pick up and leave just yet. But I think that the game plan is that once we hit the goal, pick the next city and start traveling there on a regular basis until we're ready to take root there and take down some deals. But again, it's got to be a deal that I want my partners to know what the plan is, and I'd love for them to partake in what we're doing. I'm very fortunate that the partners I do have they're awesome people. They're great people. And, not the other partners anyway, but not that one, but the other partners I have, I'm very, very blessed to have such great people in my life. They're very positive, they're motivated, they're driven, and those are the types of people that you want to have in your life. You want to have people like that are really aspirational and they want to grow, and that's what you need in your life to see some massive change in your life.
Sure. Well, let's say you're going into a new market. How do you decide which brokers to meet with, and how do you begin those relationships? It's funny. There's the 25 cognitive biases, right? And maybe your listeners can Google it and they'll learn about these 25 cognitive biases. But think of it as the software that runs us. Right? It runs people. And when you understand what the 25 cognitive biases are, I'm not going to say you can use them to your advantage, but you can use these biases to really help you in terms of sales and marketing. Because this is essentially what we're doing. When you're breaking into a new market, you really have to give that person a reason to talk to you, right? So there's the social proof bias, right? Hey, Bill, I'm giving you a call, and then you might say, well, who are you? Like, why should I talk to you? Oh, well, I'm here from Cleveland. I run the Bulletproof Cash Flow podcast, and here we are on the website. You should definitely go check that out. You might go check that out, and you'll see all the comments to the videos. You might see the stuff that we're putting out there, and you realize, okay, he's got other people that are following him. He's got social proof. He's already been vetted out by these thousands of people that download his podcast. He's probably someone I should talk to, right? That's one thing. So how do you know who to call, though? I mean, are you just at random going, Marcus Milchup, or how do you find out what guys to? I mean, there's a lot of brokers. Yeah. Yeah.
There's a lot of brokers out there. Unfortunately, because I have a good network here as well. So I have friends over at Colliers, at Hannah, different Marcus, of course. If I tell them, hey guys, listen, I'm looking to move down there, they can make introductions for me. It's better to have someone else make the introduction for you than you trying to go in cold. A nice warm introduction is always the better way to go. It just helps smooth things over.
Yeah, that's great. I think that's a key, definitely a key tip that people should, if they can do it, if they're newbie and they're moving into a new market, what would you recommend?
For a newbie, they ought to be starting in their own backyard. That's it. And I'm sure there's countless shows that talk about this. And you know what? It's sound advice. It is the way to go.
I agree. I'm an out-of-state investor, and I always tell people, I say, if you can buy property and get the numbers that you need in your area, do it. Don't look in these other markets. I live in Southern California. It's pretty tough to do multifamily in Southern Cal.
But you know what though, Bill? If people are in Southern California and if they really, really want to do this business, they should move. Serious. I mean, just
that's true.
move.
It's tough when you got kids in school still
Yeah,
and things like
I know.
that. But it's true. And to couch that too, one of the guys that kind of inspired me to get into this, he was on my board of directors for my nonprofit, and that's all he does is buy and sell apartments here. And so he's been doing it for, I don't know, 30 years. And so there are people doing it, but it's like very cash intensive. I mean, even the earnest money deposit could have, 7 figures on it. It's just like crazy. So, it's a bigger game. It can be done. It's certainly compressed cap rates, but you can learn how to play it too. It's different for a guy starting out. That's for sure.
Yes, absolutely. And it's not going to be easy for the one starting out. One of the things that I tell people that are starting out is you need to have a value proposition. That's probably one of the biggest things that they underestimate. And by that, I mean that when it comes to putting a deal together, there are many aspects to a deal. You either have to raise the money, you have to locate the deal and operate the deal. You have to properly manage the deal. You have to do construction. You have to do maybe bank financing, which is actually quite easy. So we probably shouldn't even count that. But if you are a newbie, then you need to come up with one thing that a syndicator would say, I need to have this guy on my team. One thing I tell people is, and we do live events here in Cleveland every other week. These guys flew in from Seattle. They came out to our event. And I'm like, guys, listen, your superpower is to go and raise capital. You don't need to be building duplexes. You need to learn how to raise money, put on events, and raise commitments out of people to invest in markets like this. And then you partner with someone, the market meeting Cleveland, and you partner with a good syndicator here. It doesn't have to be me. I don't care who it is, but that's the game. You partner with someone in that market and you build a business with them. That's how it's done. But you have to bring something to the table. You can't just throw a deal over the wall and say, here, let me know if I can have my 10%. It does. Nobody will take you seriously. No one will take you seriously if you're doing that.
Well, our audience is primarily folks 50 years of age and older, although we have a lot of others that listen. It's really our focus audience. And these are people that are approaching retirement, okay, and they've sort of got their nest egg and they're getting ready for retirement. And, they may be questioning whether or not they have what they need for the long run, because people are living longer. There's a lot of other, aspects out there. And so they're kind of looking at real estate investing as a means to be able to fill that gap and to give them that comfort that they need. And there's those that are actually living already, they are retired, and they're living on a retirement income that maybe they feel really restricted, that they can't go anywhere, they can't do anything. And they're looking at real estate investing as a means to sort of boost their cash flow. What kind of advice would you have for these folks? You're starting later in life, and so it's not like they've got a long time frame here to be able to build this stuff up. What kind of advice would you have for them in getting into this space?
Well, Bill, I'll preface what I'm about to say with this, that I'm no spring chicken anymore, right? I was a CIO, as I said, even more recently, most recent position. In my late 40s, I'm going to be 50 here soon. I can't believe I just said that out loud, but yeah, I'm going to be 50.
You're going to be an old dog, dude.
I'm going to be an old timer. Yeah, I'm going to be an old timer here soon, right? And but you know what, Bill, man, I tell you, this last go round, working for the man, I got lazy. That's what happened. I got lazy. I was earning very good money. I was kicking around doing some multifamily, but you know what? Why should I bother if I'm earning all this money? Who cares? It doesn't matter, right? You get lazy, get soft, until one day a new CEO gets appointed to the company and tells you to get the hell out of the company, right? Then what do you do?
Ouch! That's happened to
right?
me too. Yeah.
Then what do you do, right? That's
right.
Then what happens, right? All that money that you're supposed to save, you just wasted on dumb stuff. So you did that, right? That's what I was doing the entire time. I was even recently, I still wasn't focused. And when I say recently, I'm saying 3, 4, 5 years ago, I was unfocused. I was lost. And I decided that I wanted to build a legacy that'll outlive me. Now, when you have a goal, when you have a purpose like that, where you change the whole mindset around what your purpose is now. Now things become very, very different. You're not living for the day or the week or even the year anymore. You're living for a decade at a time, right? Meaning, I'll put this way: I want my son's kids to know my name. That's how big I want to build this thing, even as late in the age that I am right now. But I will say that if you don't reposition yourself, you could miss out on the best time of your life, and the key is, Bill, we're running out of time. What are you going to do with the time you have left? We've got to make the changes now to see things through to the end, so that way we can be financially stable in the future, right? We're right today, most people are stuck between the lines of limited thinking and limited people. Right, that's ultimately where things are, right? And for me, it's all about leaving a legacy for my family. The money matters less actually than realizing my full potential. It's about getting to financial freedom. And to get there, you got to take massive amounts of action. And the great thing about this business is that you don't have to do it by yourself. You can get into deals with other people, other experienced people that know what they're doing. And I think that many people, they trick themselves into studying forever. They're listening to podcasts and they're reading books, and our brains trick us into thinking that we're actually doing something where you're actually not doing anything at all. You're just sitting there. You're sitting there. But this is one of the biases, one of those cognitive biases I mentioned. That's exactly what it is. You're doing something. Your brain tells you you're doing something, but you're actually not doing anything at all. But if you really want financial freedom, you can't just take the money and hand it off to someone else and let them run it for you. You have to take control of it. And this means taking action, getting a mentor, partner with someone that knows what they're doing to get you through the tough stuff. That's the only way. It's the only way. And I've created companies from nothing. I have created mobile apps. I have built from scratch multiple call center type businesses as well. I've done it all. This is the only thing that works. It's the only thing that I could figure out anyway.
It's great advice. I think very well spoken. Thank you. Well, let's, we talked about your business a little bit. What is ahead for your business? What you touched on a little bit, but sort of what's the thing that's really exciting you about your business today, and what vision you have for the future?
My team and I are kicking around a large development deal, here in Cleveland. So
that sounds neat.
Yeah, well, I can't say too much about it. It'd be a huge, huge, huge deal. I'm not sure we're going to pull the trigger on it or not. It's really big. It could be very impressive. If things change, I'll definitely tell you about it.
And then we have you on next time. You'll say, "Well, biggest mistake." No.
It'll be development. Yeah, no, but there's some level of risk that comes with development,
right? And
I'm not a developer just yet. My partners are, so that's good. Again, that's what I said earlier. I don't have the hardcore expertise my partners do. So if I can get in and get into a deal with them, why not? Right? I'm bringing something to the table, right?
Right.
But that could be a very big thing that can put us on the map, and so far as even changing the Cleveland skyline, which again goes back to that legacy. Everything ties back to that legacy, that goal that I told you about. Everything that we do now all ties back to that goal.
That's one of those tempting areas. I'm definitely not there, but that would be something that would be pretty exciting, is to create something. Evicting a tenant can be painful and cost as much as $10,000 in court and legal fees. The best way to protect yourself from evictions and bad tenants is to screen your tenants. And the best way that I know to screen your tenants is SmartMove. SmartMove is part of TransUnion, a trusted consumer reporting agency with more than 4 decades of experience. They built an online screening service for independent landlords that delivers critical credit and background reports to you in minutes. It is a valuable tool to help you when you are trying to decide who to put into your rental property. And they can help you find your next great tenant. Only SmartMove has a credit score built specifically for rental screening called Resident Score, which can identify eviction risk 15% better than a traditional score. With the Smart Move report, you'll also get a criminal background check, eviction history report, as well as a full credit report. And only Smart Move has Income Insights, a report enabling you to analyze renter income to determine if further verification is needed. See why 9 out of 10 users recommend Smart Move, and more than 4 million landlords have used Smart Move to make better leasing decisions. Smart Move has a special offer just for Old Dog listeners. Go to tenantscreening.com, enter code OLDDOG25, and you'll get 25% off your next screening. That's tenantscreening.com. Use code OLDDOG25 at checkout for 25% off your next screening. Smart Move. Reduce your risk of non-payment and evictions. Time's like zipping by here. I'm just, it's frustrating because there's like a lot of other things I'd like to ask you here, but we've come to our what we call our wrap it up section here. This is where I ask you a series of quick questions about resources that you know that have been valuable to you, that might be valuable to our listeners. And if you are ready, we can go ahead and wrap it up.
Yeah, let's roll.
All right. Favorite real estate book?
Multifamily Millions, David Lindahl. He's got some good stuff. Yeah, he's got some
excellent
stuff.
David's, he's got great, good recommendation.
Yeah.
How about favorite just general business book?
I got a bunch. I love Pitch Anything by Oren Klaff. It's just about how to pitch, how to talk to people, how to present. Of course, 10X Rule, Grant Cardone, Emotional Intelligence, Daniel Goleman, all good stuff.
Those are three good ones. Definitely. Yeah. I'll fit them all in there. That's excellent. How about most valuable website for success other than your own?
dailystoic.com. If you want to understand Stoicism, and for those that don't know what it is, it's an ancient philosophy used by some of the most successful leaders in history. It can really help and become a source of strength and stamina for if you have a challenging life. Practicing Stoicism is something that will certainly get you through, and that website's been invaluable.
Oh, interesting. Favorite app? Okay, you've written apps, so this could be a good one here. Your answer.
I use YouTube just to consume. My routine is to go to the gym every morning. Every 7 days a week, I'm going to the gym. So I do CrossFit and boot camps and things like that. So it's all about motivation. Listening to YouTube. I really like Genius Scan though. Especially for some of you guys out there that need to scan signed documents.
I use it all the time. That's one of my favorite apps. Yeah,
it's awesome.
Good choice. Yeah, boom, instant. You can take a picture with your phone. It's not the same though. They actually, they make it look like the real document's great. Good one.
Yeah.
Okay, favorite quote.
Without integrity, you have nothing.
Boy, that couldn't be more truthful. I love that. Love that quote. Okay, so here's the final question, which is kind of an interesting one here. But if, for example, you lost absolutely everything you have, okay, knowing what you know, and you have only $1,000 in cash here, what would you do to relaunch your real estate investing business?
I would do two things. I would rebuild my network and learn how to raise money, learn how to raise capital. This means investing in sales training, going to events, meeting people, and taking massive action to get in front of potential partners. The key is to work with others. And like I said, bringing something to the table. So if I'm able to raise money, if I'm able to network from that network that I'd rebuild and go to a syndicator and present to them my ability to execute, then I could basically rebuild everything right from scratch. It's the ability to sell, it's the ability to sell.
That's it. That's great. Great. Yeah. Wow. Well, it's a shame that time just zipped by so fast here. I'm sure there's plenty of folks listening that, would like to find out more about you and what you do and your company. And what's sort of the best way for folks to get a hold of you?
Sure. Go to bulletproofcashflow.com. You can also email the team at info@bulletproofcashflow.com. Of course, all of our information, podcasts and all that, it's all over Facebook. It's all over Instagram. We're on iTunes, we're YouTube, we're pretty much any type of downloadable platform, we're there.
Yeah, and we'll have links to all those things as well in our show notes. So those of you listening, don't worry, we'll have all that stuff easily available. Well, we have come to the closing here of our show. Of course, you know that this is an important time that basically takes all credibility away from everything you've said. No, I'm just kidding.
That's funny. I was just thinking that.
Yeah, really. I did so well up to this point. Okay. And this is where you give us your best closing howl, okay? Your old hound dog howl. As best you can, man. And you know about the contest. You know, we have our annual Golden Howl Award. So you never know. You know, this could be it.
So if it's the best, is it like one of three? Or
No, it's the best. We only have one winning howl.
No, but I mean, it's my best howl.
Oh,
so
it's your best. Yeah, you can't do like 6 and pick the best. No, it's good.
All right.
Just one shot.
All right. Here we go.
Ooh, that was good. That was good. I like the growl and then kind of moving into the multi-woo at the end. I mean, that definitely got to be a contender.
I owned it. I owned it, Bill.
You did own it. I can tell. You did. Man, Agostino, this has been great. This has been absolutely a blast. Good stuff. I think a lot of good meat in there. And for our listeners, I think they're going to gain a lot from this interview. Thank you so much for being on.
Hey, thanks for having me on. I greatly appreciate it.
Oh, it's my pleasure. And I just want to thank all our old dog listeners out there, too, for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Please note, everything we talked about today with Agostino, everything he talked about is going to be presented in detail. Now, we have some of the most detailed show notes just even anywhere in podcast world. So these show notes, you'll be total recap. In fact, I got actually kind of a distressing call from somebody who, not a call, but it was a note from somebody who says, "Hey, I don't even listen to the podcast anymore. I just go over the show notes." I'm going, no, that's not the idea. You got to get the inflection and the voice of the person. You got to get the emotion and all the other stuff, anyway, but they are very detailed show notes and people love them. So just look for the show notes that for Agostino Pintus and be able to get all these links and information about how to reach him as well. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.